What's up, everybody? It's a bit hitter. Here's a quick midday broad market update for you for Tuesday, September 7th, 2010. Hope you guys had a great Labor Day weekend. We continue to see substantial risk aversion across broader markets, and actually, just as we started doing this, we're seeing a pop in energy. We're seeing a big pop, actually, new highs in heating oil, and it looks like crude oil is following suit as well. That can help to bring us back up as far as the index futures, but overall, a lot of risk aversion carrying over from the overnight session last night. We're seeing substantial strength in the yen. We're seeing strength in treasuries, the 30-year and the 10-year. Also, gold remains strong as well. And bearishness in foreign exchange, ex-yen, and index futures. If we take a look real quick at our index futures and where we are, here's a quick look at the pivots with what's going on today. We continue to sit around Friday's low, which was I think it was 93.5, 93.75, something like that. And we've sort of stabilized as of now in that area. Any push that we get higher is going to test our opening price of 98 even, and if we go lower, we're going to try to test that 88 level down below. If we take a quick look over on the larger time frame, the S&P, the 60-minute time frame, we're going to have some line of support here in the 89 level, and then below that, you're looking at about 79 in there. So certainly we've had quite a bit of a run the past few days, so it's not very unusual to see this much of any type of pullback. The institutional side has been fairly quiet today, mostly on the sell side, but nothing really in size or in bulk, so it's not too bad. Take a look at the euro-dollar real quick. Euro-dollar is previously and last week we talked about how we'd see resistance at this 29 level, and we certainly saw that, and we've seen a very very easy pullback from that 29 level to wherever we are as of right now. So the euro dollar, this is just classic risk aversion as far as what we're seeing today. Take a look at crude oil just to wrap things up. Crude oil has pulled back off of its high about 75 or 75.5, I think is what the high was from last week, but we remain within this range between 72.5 and 75. This is actually, crude oil is still gaining strength, and here's that pop that we just saw in the broader market chart, but certainly crude oil is still in a bullish move. We've got these higher lows in here, and we're seeing upward pressure, so we're seeing demand come back in, and not a lot of supply lows would be making new lows, which we're not. So we're continuing to see higher lows and more demand coming through as we move along. But it will be important for us to get back up to 75 half level in order for us to break through. So we'll probably see that theme once we start moving higher in the index futures and everything else. We'll see that in the broader markets. We'll see risk-seeking behavior come through. But for right now, we're still remain risk-adverse. So I hope you guys enjoyed your midday broad market update in 3 minutes or less.